Morning. This is BloombergQuint's stocks to watch this morning. I am in conversation with Parthiv Shah of TRACOM Stockbroking. Parthiv, good morning and thanks so much for joining us. But before I go across to Parthiv, let me quickly take you through the stocks that we are going to discuss today. Now, we have had earnings from United Spirits, poor earnings, so we'll be talking about that. We're also talking about private sector banks, which have actually led the gains yesterday. And the real question is, have things changed? And if not, what can we expect as far as the outlook goes? And we also have earnings from Ujjivan Financial, so we'll be talking about that as well. Parthiv, good morning and welcome to the segment. Thanks for joining in.
Thank you, Agam. A very good morning to you and your team.
Okay, well, we start off with the first stock, and that is, of course, United Spirits. Now, we've seen a decline of around 13.5% when it comes to its volumes. There's Prestige and Above. That is the one where the largest segment of the company, which it usually saw the most amount of momentum, has actually lost that momentum completely, as they have said that there's been a deceleration in demand. Of course, we have to understand that to quite a huge extent, it is the lockdown which comes into play. Parthiv, come in on United Spirits. While the weakness in the earnings was expected, what's the way forward here? Has the stock already corrected enough for you to see any opportunity? And in terms of outlook, what is your take here?
See, Agam, the stock had rallied going into the earnings, and probably the rally was also attributed to the fact that there was some hint of delisting for the stock. And that is something that really created a buzz because generally, if you look at the past track record, a lot of multinational companies do tend to give a huge premium to get delisted. But I think looking at the earnings, I think it was really worse than the worst of the expectations. Because I think a simple calculation of the volume degrowth, which came to somewhere around minus 13.5%, the major worry was, as you rightly mentioned, the segment, the prestige and above segment, where I think it was a degrowth of negative 20%. Rather, to our surprise, the popular segment, which otherwise I think is not expected to do relatively so well, degrew by only 8%. And I think the management indicated to the fact that it was purely because of lack of on-channel presence, which generally tends to get better sales of prestige and above segment. But nonetheless, if I look into some of the peer competition, I think they have done relatively better. So my slight worry is United Spirits losing on its market share to some of its major peers. So that is something we'll have to see because now we know that quarter one going ahead is going to be even poorer than what we have seen in terms of the reported numbers because here at least you have Jan, Feb, full normal working months, which I'm sure would have grown in terms of the volume. But look at the carnage in March. So my sense is that the stock could derate, and I think at levels of around 500, 510 would get attractive. The good thing is that they have improved the balance sheet. If you look into the net debt, that has reduced, which is a very good sign, despite the fact that the working capital was slightly stretched. Overall, I think we are very upbeat on this segment for a very longer horizon, but couple of quarters could be challenging. So any sort of dip, I think investors should use as a long-term opportunity to buy into this stock.
Okay, fair enough. That's your view on United Spirits. But I think moving on, we saw a lot of action in private sector banks yesterday. And over the past few weeks, what we have seen is it moves on to lower levels, eventually comes back. And I would say it's largely a range-bound month for some of these private sector banks. But there was a lot of strength yesterday. What's the way forward, especially for likes of Axis Bank, ICICI Bank, HDFC Bank, or IndusInd Bank for that matter? What's the view here, and perhaps your preference among these?
See, Agam, one thing is clear. I think the way forward is very simple. We'll have to separate the men from the boys because we are in such an unprecedented scenario where I think, despite the fact with all the bullish stance, we might end up seeing the commentary change towards the negative, and even the big of the biggest bank might be talking about the fact that a lot more people are seeking moratorium, and even from the people seeking moratorium, even in a very strong retail loan book that they have, I think there could be some sort of slippages going ahead. So there could be elevated credit cost even for the big of the biggest banks. So this is where we are looking into the balance sheet details of each and every bank, where I think we are preferring those banks who also have a very good capital raising ability. Something like what we saw from Kotak yesterday. They landed up, I think, with the QIP, very smartly raised, good capital cushion, despite the fact they're sitting on huge amount of capital adequacy. Look into other banks like HDFC Bank, even something like an Axis Bank, ICICI Bank. And I think all these banks, the good thing is over and above the ability to raise capital otherwise, they also have a lot of subsidiaries which they can monetize at the need of the hour. And those subsidiaries which are getting monetized can give additional capital cushioning to these people. So I think it's better to select, have very select base of private sector banks in a portfolio. And in terms of pecking order, what we like is Kotak Mahindra Bank, HDFC Bank, Axis Bank, and ICICI Bank. I think we prefer to stick our neck out and feel that besides these four banks, at this juncture, it's better not to venture out into any other private sector banks.
All right, fair enough. And on that note, let's address the final one. We have Ujjivan Financial Services, where we have seen net interest income rise 41% year on year. And the net profit has also risen around 49%. And this is despite the fact that the company's taken a COVID-19 provision of around 70 odd crores. Of course, overall provision numbers are not as high, which is why profit has been so high at around 49%. Parthiv, what's your view here on Ujjivan Financial Services and if perhaps some of its peers as well in this space?
See, Agam, we know for the fact that Ujjivan Financial Services is now a holding company having almost 83.3% stake in Ujjivan Small Finance Bank. And I think it's more relevant to analyze the results that came out from the Ujjivan Small Finance Bank, which I find very difficult to understand that, they're going to have a very, very hard time going ahead, despite the fact that whatever the management was talking on the con call in terms of slightly bullish stance, they've done some sort of hiring to increase their liability franchisee, but sitting at 13.5% CASA is not going to help their cause. And they are no doubt trying to reduce their microfinance portfolio very cautiously. I think the management decided to do very less disbursements in key states where they find a lot of risk states like Assam, some pockets in Maharashtra, Karnataka, and other states in the east. But nonetheless, I think the road going ahead is going to be extremely challenging. They are not going to earn huge ROAs and ROEs which were initially predicted in the pre-COVID levels. And garnering CASA in such a difficult credit environment, I believe it's going to be very, very difficult. Here we have heard a lot of rush people wanting to lock in their money at 7 years in RBI 7.75% bond, which unfortunately today is the last day. So banks like Ujjivan, I think, going to face it very, very difficult to garner more CASA. So we are not very upbeat on these names, and also we are not very upbeat on many of its peers who are also a small finance bank category. We saw huge derating in even a very credit-worthy name like AU Small Finance Bank, whose a lot of book is quite secured and their CASA is even better, but yet we have seen massive derating. So I think we are very at this juncture to venture into these small finance banks.
Okay, finally, so then Parthiv, let me conclude by asking you, do you see an opportunity, an idea at this point in time in markets?
See, again, Agam, I've always felt that a stock like Idea is more like a punt at this juncture. And even in the past, when it was at 3.5, 4 levels, I just suggested that it cannot be a huge part of your portfolio. If you are having telecom exposure in your portfolio, you have to prioritize it between Reliance Industries and Bharti Airtel. And if at all there is Idea, you have to consider Idea as a call option with unlimited expiry, and you know what maximum loss you can have. But yes, I think there are now a lot of hopes. ARPUs are increasing on the board in the industry. And if Idea can also manage that, and as per the last quarter, what they've shown, garnering more of the 4G customers and post the synergy benefits between the two companies, Idea and Vodafone, and after the network integration is over, which is over almost in 80% of the circles, my sense is if the quality of service were to improve and ARPUs were to improve, I think we might see some sort of knee-jerk reaction on the upside in the stock.
Fair enough. That's a valid point made by you, Parthiv, out there. But on that note, Parthiv, I'm going to take a moment to thank you for joining us and taking us through your views on, well, the stocks that we discussed this morning. And on that note, it's a wrap on the Stock Watch on BloombergQuint. Stay tuned. We'll get you a lot more.